Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. It is August 27th. We are recording here in the afternoon. My name is Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi. Hey, Barrie, how are you?
I'm doing good. Ready
That's
to
good.
wrap this up.
Yeah, nice fun week. Things
have
are
a busy
moving.
week ahead.
A busy week ahead. Busy. I think it's going to be a busy rest of 2022.
Yeah.
But today's show, we're gonna start with Bitcoin. We'll cover Bitcoin. Then I'm gonna throw it over to Barrie, and he's gonna do the big five, which is the S&P futures, crude, bonds, gold, the dollar, and the euro. And then he'll throw it back to me. And the select commodities this week we're gonna cover are wheat, corn, soybeans, crude oil, sugar, and coffee. So let's dive right in with Bitcoin. Well, no surprise here. When we didn't make hay above the upper limit here, the full square, we knew we were in trouble, and trouble is starting to manifest for the bulls. We broke trend lines. We broke this trend line, which was holding for a little bit. We sat on this trend line for about a week, broke that. I mean, we're heading down to the half square. You know, that's where odds favor we're going. The half square, call it 15,700. And if that doesn't hold, then you're looking at this target box of, 9,000 to 12,000 on Bitcoin. I mean, the story's the same. You can't make it above the resistance, then you're going to go down and test support. And that's the short and sweet for me on Bitcoin. Anything else you want to add on Bitcoin, Barrie?
No, Ben, it's just doing exactly what it's supposed to be doing.
That's right. It's pretty boring.
It's good enough. It's doing well.
But it's tradable, and that's the thing. If a market follows the geometry and respects trend lines and other tools that you have, it gives you the ability to get in there with good risk reward setups.
Check out. I just noticed. Check out that last ABCD. Right, if you take the May high, the false break from the triangle high in May, right before June, right at June, come down one more, right there. That A. B down to the June low, and then C would be that. Yeah, check out where that boom.
Right in the middle of the target box.
Pretty damn good, man.
Good. Yeah, that's like 3 or 4 ABCs that end in that area. So I mean, that's kind of the magnet. So we'll see. Nothing to do on the bullish side, obviously, until we clear this level. By the way, all the levels are available on a Google Doc spreadsheet, which we'll share the link with when we post the video link later this evening. Let me throw it over to you, Barrie, and let's jump in. It was a busy week in the ES, so let's see what damage was done.
All right, let's do that.
There's that big bar on Friday. By the way, everybody, if you like the videos, you enjoy what we're doing, please hit the like, subscribe, hit the bell, all the other garbage that YouTube asks you to do, because it gives us good feedback and helps us to keep pumping these things out every week
and grow. Right?
Yeah,
and we'll do more stuff if we
if we see people like it and use it, we'll definitely produce more. So,
all right, what a week.
Barrie, cycles are useless. Why do we even talk about cycles, huh?
And just after seeing that ABCD and Bitcoin, I just might as well drop this thing in, see what happens.
Absolutely. Right? Yep. Oh, look at that.
How's that?
It's beautiful. Could hit that Sunday night.
The first hour.
Right.
All right, you guys. Well, to begin with, if you guys haven't seen, if this is your first time or you didn't see the last couple of episodes, I would say to go back and at least for each segment, there are chapters below. You can just go down and jump to whichever section. And Ben and I both follow up from week to week normally, if it's an active market. So it helps for you to be up to date. That way, when you see this week's, you kind of know how the story is. And last week we left with two key numbers, 41.25 and 41.87. And I left the 42.25 from the prior week because it is a kind of important level.
Mm-hmm.
And the idea was, let's see, where the pullback, where the market would hold and rally. And well, let me zoom in. And what happened was, early part of the week, we continued the sell off, right? We came off of the, we broke through the 42.25, came down to test the 41.25, which was our support zone.
Multiple times.
Yeah, let me get rid of this, right? We came down to this area, really pushed it. And I even said, it's probably not going to be 25. They're probably going to push it a little bit further.
Mm-hmm.
And then we rallied right up into this 42.25 from the week before. And that was, that's pretty much when the news came out, Friday morning, and all that hustle bustle, and we reversed. And also what happened was, we had this channel up. If you guys had this channel and we broke the channel, went back, and it kissed it just about perfectly right at the high where the 42.25 was. And, we sold off. And that was that. I thought we'd get a little bit more of a rally, maybe into Friday, a little bit higher into Friday, or maybe even midweek next week. And we did note, we did almost get to 90 up here. We did the 45 by 90, 45 meaning in time, a little bit off here and there. Okay, fine. It was close enough to note, right? Like something's up. And now we had the first counter trend off of that high. So earlier we were looking for a counter trend here. They said the trend is still up, right? Well, it was up until Friday, technically.
Right.
So trend was up. We're looking to see if either one of those levels held, and 41.25 held. So technically, long as that held, we're going back up. And we were holding the daily highs and lows. And Friday, of course, we did an outside reversal. And in doing so, we took out Thursday's low. That's the first marker. And of course, we took out the low for the week and closed on, so this is all done deal now. So which means this high looks pretty good. Looks like it was a couple of days off, but the 90 by 40, 45 by 90 is in place. And the fact that we came so hard off of this, let's just say the first pullback off of that high, we were kind of looking for a change in trend, but I was thinking maybe early this week or mid this week. But hey, they can come a little early, and that's why we watched the levels, right? And holding that mid level, the 88 level and 42.25 not letting it get through, showed the market is weak. Okay, this is the point. So here we go. Now we turn down. For next week, 41.25 now becomes huge resistance. And I think I'll just leave it at that.
Right.
There isn't a whole lot to talk about because we did turn. Basically, when this happens, like, for example, when we got this low come in, we were, as soon as we could confirm it early on, even Ben gets on it at the 4-hour level, right? We were looking for the, lows to hold above the low that squared out. And then we would call that trend to be up, and you'd just trade the long side till we get some kind of a reversal off of one of these levels. So here it's the same thing that happened, couldn't really make 42.25, crashed through the quarter of the square. All right, that's the signal to, be on the short side. And I think intraday on Twitter, our fuse line was 42.96. So we were, our is it 42, 41,
41.96, yeah.
So it was right about there, pretty close to the open. And so we caught that early, and then we sold off. So for next week, I would say, 4,000 is a key level. And the next one would be 39.40 is kind of an important level. You put that in there. There's 39.40. This 40.30, I'm just going to remove. I think those days are over. We got the half square where the ABCD comes in. So let me give you that number. So basically 4,000. That's
4,000,
a decent number for, I would definitely watch that because it's half a square. If we're going to get another bounce before continuing down, it would be around the 4,000 level, which would mean, 39.90 to, 40.01, something like that, right in that range. If we get that, then, any counter trend move up under 41.25 is weak. I mean, it's fair play, right? To sell it. So that's the basic play. Of course, we have a trend line coming through here. You guys can watch that. What else? You want to add anything to that?
No, I think you got it framed very well. That
Yeah.
the action on Friday, increases the odds that high up there is good, and we just have to now watch price action to get more information to support that, or information to go against it if it gets strong.
Right. I think that's kind of the story. Let's take a look at the weekly. Here's the weekly S&P, and we had kind of a warning a couple of weeks ago when the high came in. We really couldn't hold above the half square. And I said, listen, if the weekly can't hold above that, we're definitely getting a little bit into soft areas, and it's not as firm, right? If we were going to go higher, we would have held above the half. We didn't, and now we're slipping right through. I'm looking at this as another complete leg, and if that's the case, we should at least, if we take that, we should at least go and check the bottom, right? Double bottom.
Wow.
Okay.
Yeah.
And so that's a move there. And I'm guessing this is going to go, and we'll probably at least to go to 90 to start with. So even though the 72 has been fairly good. So something like this, right? We can get down to this level. Let's see how that goes. I don't want to jump between these levels, so let's just keep it straight. So I'll put it back to 72 and
I also did on the daily, I just, from the high, I said, what's 90 days out give us? And it's around December 20th. If we go 90.
Yeah. Well, we're definitely open to visiting 35, 70, this area down here. That's not out of the question. So that's what we're looking for. And, if we understand that correctly, I think we have a lot of good downside to trade. And I say enjoy it.
Right.
So 41.25 again would be a cutoff point, right? If we can somehow settle about that on Tuesday, some kind of crazy buying comes in, then we pause and then we watch to see what the price action would be in here. Otherwise, it's weak below 41.25.
You can see on your chart too, Barry, the half square. If you just look at the other half square, it gets you near the end of December. If we do 90 in time, 45 gets us into end of October, and 90 would take us, right there.
Yeah, right. Yeah, that would be that would be nice. Yeah. All right. So we're done with that. Let's move on to bonds. Bonds, we left off saying last week with, two numbers. Let me expand this a little bit. We had, we called it to be weak below 140 and some support zone around 140 to 137, 140. And if we can't get above that, then bonds to be weak, and looks like we slipped through. And I would say it's in a weak position now. Clearly below 137, it's weaker, but generally below 140, it's softer. It might get a little bit choppy like we did here. Just watch your shorter term, or, look at the closes and highs and lows on our daily bars to see which way this is reversing to. So like Tuesday, we get a higher low, and you reverse. Long as the reverse is below 140, I would say it's on the weak side. So I would play it like that. But the bracket is 37 to 40. And once we clear one, like let's say we clear 137 to the downside, somewhere in here, we take out Friday's low, then that opens up another space. So there's definitely more downside, but we have to watch it. We could also consolidate here, right? Especially between 140 and 137. So we're kind of waiting to see which side it's going to pull into.
That box you drew is really good. Captured a lot of the price action.
This one.
Mm-hmm.
Yeah, it did over here. And now looks like we might be
Beginning
starting
to here. Yeah. Yeah.
unless we can like clear to the downside or the upside of that. And
Right.
downside, even if we clear it here, you know, there's a lot more to catch on the next trade.
Mm-hmm.
So that's there. Looking at the weekly bonds, pretty much the same story.
Mm-hmm.
Basis weekly 141.03 was the level we were watching, and we wanted to see after this low came in at square and a half. We wanted to see if the first impulse, you know, the correction off of that would hold about 141. And if it did, you know, then we could count on a stronger move up. We didn't. We slipped through, and as soon as we started getting weaker, you know, I basically we talked about it, saying it's generally weak under 141 basis to weekly chart, and so it keeps slipping lower, and looks to me like we're probably going to go and test this at some point, and if that goes, it opens up a lot more downside. Okay, and maybe we'll do a longer. We can spend some time on bonds next week.
Okay.
Dive a little deeper. In the meantime, let's get into crude oil. This is our chart. From last week, everything's pretty much the same. Just to bring you up to date, you know, within the circle, we were looking for weaker prices and you know, pressure to the downside. As far as levels go, we're just working with these two levels for the last few weeks because that's where we've been. And it's been this 91 and 97. We wanted to see it either clear 91 to the downside or clear 95, 97 to the upside. And you can see we've been under 95 level that we normally use. You can see like a couple of weeks.
Mm-hmm.
And once we got under 91, if this was sort of like, let's say the market was ready to go lower, we should have just gone and tested 83 right away.
And it didn't.
And it didn't. And it's probably that 90 square that you were talking about last week that held it. So we can say, all right, so that's a vibration that's working. So we have a 90 there, and you can see the quarter square is right around 97, right? 95. So it's possible we're working this. And the circle's kind of, you know, we're going to get to the end of the circle at some point. But I'll tell you what, if we break this to the upside, I think we have a new leg starting, and that's kind of how circles work.
Yeah, it'll fly.
And if it holds, then we're probably going to go back and do a false break here, and maybe even go a little bit lower. Maybe test that 83 area before it's all said and done. So those are the two things we're looking at. For now, the problem is it's between 91 and 97. To me, it's sort of a no-go zone. You have to kind of wait, you know, unless you want to just day trade it. It's you know, we're going kind of sideways. There's really no trend here. So we'll wait to see how that plays out. You could do a fork here and see if that gives you any, or even a trend line. You could do a channel here. I try not to get the short chart not too busy.
Right.
But if you're going higher, something like this,
yeah, that looks good.
That should work. But if that goes, then it's either we're going to the 70s or we're going to do a quick cleanup flush and then go on up, right?
Stop cleanup operation.
Yeah. But long as it's above 91 and below 95, you know, that's kind of a no-go zone for me. So we'll wait to see how that works out. Here's the weekly crude. And the reason, you know, there's another reason to be bearish is we're under the 90 on the weekly squares. And you can notice that we didn't really sell off, but we're not really taking off either. And we're not above, you know, if the 90 was at this level around 85, okay, that would be very positive.
Yep.
But our positive level was around 97 and we broke through and we're just kind of hanging around here. So this is not entirely bearish, not entirely bullish either. So, you know, we have to wait till something develops out of there. Basically, you can see for the last month, we're basically the same area, right? And that's why you want to really be careful trying to trade this on a daily or short-term basis. That's why we're waiting for like some kind of a break on the daily. Now, long as it's below 97, you know, weekly basis, it's basis weekly charts, it's still kind of sloppy, I would say. But if we take out 90, 91, then we have to be on alert because that could take us down to, mid 70s. So there's a potential trade to the downside for the brave.
Yeah. Yep.
And level to watch is 90, 91. All right. Right here, 91. Yeah.
Mm-hmm.
Then we have daily gold. We left, talked about two numbers, 1814 was the level we need to clear. Long as we're above the 1730, we're okay. It's sort of a, it's not super strong, but it's not weak, right? It can hold its own, let's say.
Mm-hmm.
It looks like we're coming down to fill the gap, and looks like we did. We'll see. It might spend a little bit more time here. We have 1/3 of the square at 1777, 1730. So we can look at that bracket until we get some, new energy or new blood into the system. This is sort of the box there I'm watching. So if we can clear that to the upside, then we could probably take out 1814 in a hurry. If not, we're probably going to be in here for a bit. Okay.
Mm-hmm.
And it's not like some kind of new territory. We spend a lot of time, just sideways in that same area. Look back here.
It feels like gold is just waiting, right? It's just waiting for the trigger, whatever that trigger is going to be.
Well, when we look at the weekly, you'll see that the weighting is actually in a very good area. So
yeah, weekly, monthly is very bullish.
So you can see if we draw that box out, it's been a area of holding, right? It's either this side of it, that side of it. Here it was the bottom of it, top of it, right?
Mm-hmm.
And now we're on top of it. So that's why you have to watch it, right? If you get under 1730, then it opens up 1676 and further down, and we might get this flush we're looking for, below these lows that we've had in the past.
Right.
Get this whole support level here. So it's possible we do an ABCD or something down, flush it out, and then turn around. But for now, between the 1730 and 1814, it looks like some kind of a consolidation. So we'll be patient with that.
Because you told me to my phone.
Yeah.
We're a lot closer to the end of that than the beginning, just looking at the bullish sentiment. The bulls are so frustrated with gold.
Well, they shouldn't be.
They can't even defend it anymore, which tells me, okay, we're getting close.
Well, somebody's defending it here.
Yeah. I'm talking about they can't defend their love of gold. You know what I mean? Like for the last 2 years, it's gone nowhere, and they're just super frustrated.
Well, the lesson in that is you can't be in love with these markets,
No, they're not going to love you back.
You have to be ice cold with these things, all technical.
That's right.
And well, the defense is somebody's putting, money where their mouth is. So here is the basic defense line. It's around 1670 area. And if you zoom in, so they've held above that, yeah, this counter trend is bearish, but the bigger one is bullish, right?
Absolutely.
So this fourth wave type of action is where everybody gets frustrated. And that's why we wait for these brackets to clear. If the bracket doesn't clear, we know it's sideways. Right now, if you look at this, there's no trend here.
2 years sideways.
Unless you're in a 4 hour or something, then you go, hey, this is the downtrend. All right, fine.
Mm-hmm.
But we're looking on a week to week basis. We're really looking for a halfway decent move. Last time we were looking for support here. We got a little bounce off of it. Should hold above 1767, and it didn't. So now we wait, right?
Mm-hmm.
If we come down to 1670 in here, I wouldn't mess around. See what happened here? So
yeah,
this is not an area to mess around. It's above 1767, or we had to wait for this flush to finish up.
Mm-hmm.
Generally, I would say it's weak below 1767, and looks like we're opening into that area next week. We'll watch it. Interesting, gold is down. Well, dollar's up, that's why. And market being so. Let's take a look at the
good time
dollar.
to switch to the dollar. Yep.
So 107.25. This is the level we've been talking about for the dollar for a while, and that's sort of the balance point. It's 144 degrees up from the low in 2021. We got a false break here. and I said, we got resistance up here. If we clear that, then we're probably going to go higher, probably to visit, 111, this half square up here, 111, 112. Well, we're definitely open for business now. So we'll see how that plays out. But I would say above 107 until we hit some kind of resistance on the chart, we're on a bullish side.
I mean, listen, if we could take out those recent highs, we didn't even make it down to the 144. That's showing real strength. It couldn't even get down to test it.
Exactly. So it's just hopping. It's hopping. And looking at the weekly, well, this is the breakout point, eh?
Now
I had these numbers up here for months, probably. About that, no, okay. So weekly basis, if we clear this, we can get to 112.21 in a hurry.
Yep.
Especially because look at the angle of attack here. We're practically vertical now, right? Right before everything blows up.
Right.
And we're getting close.
Yeah.
It's gonna be fireworks. Well, it's already fireworks for some people. So
right.
Anyway, we cleared 107. So this is bullish on a weekly basis. 108. Let's say 108.90. Okay. If we can settle above that, then I think 112 area is the next stop.
Yep.
Key thing is we didn't do a false break, did we? No, we didn't. So we need to take out that other high.
Yeah.
So this double top's not going to work. And the key thing is, if that's going to be the false break, are we going to go and drag this on a little longer? But either way, above 108, 90 or so, if we can get on the daily basis, we close above that and hold above it, then 111, 112 is the next target. 112 most likely basis. There's a line there, and this kind of a vertical move, man. It's going to happen quickly, and it's not going to drag on for months and months. So, because where tools looks more like towards the end of something, right? Then if you look at here, started going vertical, and and then it was over. Vertical, and it was over. So we're getting into one of those. Anything you want to add to that?
No, just that it's definitely not bearish.
Not yet.
Not yet. And a strong dollar is going to break a lot of stuff.
Speaking of breaking stuff. Yeah. So this has been good. The last couple of times, if you guys go back and check, we're looking for it to get up to either the ABCD up here. There was a little zone here, I should say, right? We're looking at the zone ABCD. That
level's been really good.
That was the box there. Came right out to the old low. This is very basic. And we saw that false break here, right? Above the old higher highs. Down, took out the low, we go reversals. And I've been saying we're probably going to go do full circle here and a full square. So we're looking for 94 to start with. Below parity, I would be trading to the short side because there's probably more left to go, especially if the dollar takes off like we see in the charts.
Yeah, no question.
And here's a weekly euro. Now, what's nice here is 360 down would be right around 90, 89, right? 89, 90. 81 is next half square. So I think this 90 is reasonable, and we have a square there. It would really clear things up. Doesn't have to go there, but we'll watch the levels. Basis weekly, we get under 98. It really opens up the next leg all the way down to 89. It's a long way,
And if you look at the weekly, Barrie, from 2015 to now, kind of looks like or actually 2017 to now, kind of looks like a fourth wave that.
Yeah.
It was just chopping between in that square, and now it's heading down, making new lows.
Right.
So,
and it kind of moves in 180s, right? So from the high to the low in 2008, That was
Mhm.
180 degrees, right? And then we messed
Mhm.
around within that.
Mhm.
And then we dropped another 180
Mhm.
right here. You know what I mean by that?
Yep. Yeah.
This
Yeah. Yeah.
structure. So
Yep.
if we take this, since we're going to be doing educational series, might as well talk about this
Do a little bit now.
right
Yeah.
here.
Yep.
And then we mess around with this 180,
There it
right,
is.
for a
Yep.
while. And if this goes, it just makes sense. We come down to 9. That's how I get that. This is not that, brains rocket science. So, so that's where we can go. I think it's reasonable to think that. Of course,
Yep.
this half square could hold it. We'll watch levels and it might get a little bounce off of it before final lows. But this is reasonable to think that because that's how it's moved in the past.
Yep.
And that's the weekly, and that's all I got. We can wrap it up. And
Excellent.
over to you.
Good coverage.
Thanks. Let's get on with commodities, which are just warming up.
Yes, they are.
I shouldn't say warming up. They're heating up. They've been warm.
Yeah, they've been percolating.
All right. Let me put it over to you. NASDAQ, same reversal. Surprise,
Yes.
surprise.
Yes, indeed. So anybody that's been following the story along with NASDAQ, we had this is actually a new setting that I put on the square. And I really like the fit. I like the vibration that we're getting, and it seems to resonate with this setting. The key things to notice here: caught the high, and then caught this, this choppy action off of the high, and then it got stuck under and just started losing it. Recently, what we saw, we had a high come in on a half square with timing.
Mhm.
Came down below the full square, come back up to test it, failed badly.
Right.
So, and we also broke this trend line that we had set up when we had this reversal at intra-week. We said, okay, now we got a decent trend line here we can watch, sliced right through it. So the next big level is this half square, which call it 12,500. All these levels again are on the Google Doc spreadsheet, which we will send to you, the link for that. So all the different markets we talk about, they'll be there. So this is the next big test. If we lose this level here, then it's down to the full square, which is 11,900. And if we lose that, then we're looking at taking out these lows. So until we can get above, call it 13,100, we're in a weak position. And this high is good. Obviously, as long as we're below here, this high is going to be good with price and time, and the pressure is going to be down on NASDAQ. What do you see when you look at the chart here, Barry?
I see new lows, Ben.
Yes.
No, the chart is good. I think the squares have worked extremely well. And anytime we start making lower lows, we have to pay attention. And I think we just started. Right? We reversed at the right point. It was exactly on the full square. So let's see how it goes. Basically, we're open for the entire square now. So
yeah,
down into sub 1,200, 12,000.
Yeah.
It's game.
And your observation on the daily bar on the ES is the same here. We did an outside reversal, closed on the exact low. On the exact low on the ES, exact low on NQ. We know, if you've been following the stories along and following the videos, in the commodity world, you close on a high or a low, it's generally a sign that there's momentum behind that move and it's going to continue. So we'll see what happens Sunday night, Monday.
Yeah, and not only that, we closed on a low on a weekly chart. So that you have to pay attention to those bars.
Absolutely. Absolutely. So that's it for NQs. Now let's head to the commodity world. We're going to start with the grains. First one we'll look at is wheat. Interesting thing about the grains, all three of them closed Friday on highs. Really, in the commodity world on a Friday, because we get the weekly bar too, close it on the high. It's very, very bullish. So here's wheat. It has been sort of a struggle to find the low here. As it keeps pushing down, like you say, okay, we thought we had 3 drives, then we had 4 drives, now we have 5 drives. But look what happened after this 5th low. We cleaned out stops. Anybody that bought in here got pinched if they had their stop tight. Went above the full square, and we have 4 full days above the full square. So the key to me for this one is take out this high here, and we should be good to go. And I'll show you examples of it in other commodities we're looking at where that actually has already happened, where, we make this initial thrust up, we have this first pullback, and then we take out the highs and they go. So on wheat, that's what I'm looking at. I think we sort of hammered out our low here, cleaning out everybody who tried here, 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 and here.
Did the flush. Yep.
Did a bigger flush, and then we reversed, closed on. Look at what happened when we closed on a high. Next day we close on a high. Here we're closing, in the midst, but right here, opened at the low, closed at the high. Somebody wanted to own wheat pretty badly this past week. So I like the look of it. There any other observations you have on this one? I know we've been covering it every week because
it's good, and I think this next monthly review we're doing, it's going to be important. We'll see a lot of things there. The weekly is okay, but we're looking at daily charts. So I think the monthly one that's coming up next weekend will tell us a lot more about, the bigger structure. So.
Yeah. And bigger picture on all these commodities. I'll give you the preview of that show. It remains to be bullish. They've all corrected and come down to very, very interesting support levels. So,
right.
That's the wind is at your back, the bigger picture. There's wheat. Let's take a look at corn. So corn's here is an example of what we were talking about, right? This didn't take 5 drives. This did basically an abbreviated 3. But look at the push up, a pullback, give you a higher low on top of a half square, and then we push up through the full square, pull back, another higher low, and then we go again. So what I'm watching here, because this looks like, maybe petering out a little bit on this particular leg, because we found resistance where we should, which was on the full square. As long as we hold this half square, I'm looking to see where any pullbacks go. If we get any pullbacks in this market that hold this half square, it's going to be super bullish. The other alternative is, if we take out this full square and clear it, next leg is going. But either way, this market looks bullish. And we've been following this story for weeks now as we saw the low coming in and, taking shots in here. So any other comments you have on corn?
No, you basically got everything. Again, I think it's time to really look at the longer term. So I'm kind of waiting to do the monthly show next week. That'll set up the rest of the year.
No question about it. And they do give you some needed perspective, because we all get zoomed in a little bit and we forget, what is the major direction from the higher time frame. Last grain we want to look at is beans. Beans is acting very well. Weeks ago, we found the low here. ABC right into a half square. We pulled up. First move up. Notice the closes at the highs and what happens the next day. See how that works?
Yep.
1, 2, 3, 4. And then we get the big push, and then the closes in the middle of the day, and that leg is up. When these commodities run, man, watch those closes on highs. It does give you a real clue.
Right.
So anyway, the pullback came into the full square. We pushed up again, made a higher high. It's what you want to see in a bullish market, right? Low, high, higher low, higher high. Pulled back, full square held again, half square held here. So we're watching this structure, because if we get this move here and take out this half square, this could be the energy to really push beans. Again, either way, it's bullish. As long as, if this was the first leg, and as long as we make a higher low here, ideally want to hold this full square, but we definitely want to make a higher low than here. There's still another big leg coming. So I like the beans, I like corn, I like wheat. They're all in little bit different stage of their sort of bottoming process, but they're showing accumulation. And as Barry said, when you look at the bigger picture and what the monthlies are telling you, we're setting up for the next big leg higher. You know, this type of move. Anything to add on beans?
Well, just, it looks like the half square and the bottom full square, that's the bracket here to break out.
Mhm. So we'll watch it and see.
Mhm.
Now we're going to jump over to crude. I know Barry covered crude. I want to show one thing in crude. It's a pattern that I showed last week in coffee, which bears watching, where we have a low in place, we have a higher high, and now we're pulling back. Right? We had this daily reversal here. You know, we have 2 days down, essentially, if you're counting the bars. And then we closed close to the high, not quite on the high on Friday, but where we closed was really critical, was this half square around 93. If we can take out the highs of these bars here, which is, you know, as you can see, it's an eighth on the square, call it 90. Let's see, what was the high? 95.77. So if we trade 95.77, 95.80, this thing could fly.
Mhm.
And again, this is a daily basis. So we're looking at, we have a high, pullback would give us another higher high, and then we take this out. I'm sorry, a higher low, and then this would be another higher high. It's the kind of move we got in coffee. It could be setting up here in crude. I know you're more comfortable if we get up above 97, which is right about here,
Mhm.
but it's in the neighborhood, right?
Yes, yes.
And this is how we find and hope to catch, you know, an early move in these markets. If you drop down to 4 hour, you can see, you know, a similar type setup where you got to take out these highs, but it gives you higher highs and higher lows after a protracted sort of move down time wise.
Mhm.
Price wise, not so much, but time wise, yeah. So that's what I'm looking at in crude this week to see if we do in fact reverse and take out these highs. It could be a run, you know, to the full square here, 104, 105 area.
Mhm.
So that's something that's on my radar. I know you already covered crude, so we don't have to jump in on anything more there. Let's go with a couple of the softs I'm looking at. Sugar did something really interesting on Friday. Look at Friday's bar, Barry, on sugar.
Yeah.
I mean, out of nowhere, that in the afternoon, this thing took off, closed right at the high. And when that happens, it gets my attention in commodities, especially when we have the same structure, right? Remember the structure we just talked about in crude, and then what we're going to see happened in coffee. Similar structure, right? We've been sideways to down, putting in a low, have a low come in, go up and make a high, made a higher low, and now we're pushing. So taking out this high here, which I think is around 18, call it 1870. Take that out, you do two things. You will take out the full square resistance, and you'll now have a higher high and a higher low. So that's why sugar is on my radar. Just like last week, we had coffee, which we'll go over. The issue that you could see is that we're still in this sideways mess. But at some point, and with a good risk reward ratio, you take the shot. Because when it goes, it's going to go. And this is what really, really caught my attention, was look at that. We closed at the absolute high.
Mhm.
And it was a big bar, right?
Yeah.
Really big
Big
bar.
bar. Yeah.
So somebody wanted to own it for some reason. I'm interested if we can take out that high in getting involved in sugar. What are your thoughts here?
Well, if we go just a little bit higher, we have a new trend starting. So I think game on. So
Yep. Agree.
Yeah.
All right, last one. Little review from last week. So coffee, let's count 5 bars back and we'll show you where we were last week. 1, 2, 3, let's see, what is that? 1, 2, 3, 4. We were right here.
Mm-hmm.
We're right here at the end of last week.
Right.
And the discussion we had was, okay, we've been in this correction. You know, we've been making lower lows, and all of a sudden we get a push up, pull back, higher low, push up, pull back, higher low, push up, higher high, higher low. And I said the next time we score another high, because this is around incredibly important support in this 212, 210 area, this thing could really motor. And look what we got. I think that's the setup in crude. I think that's the setup in sugar. You know, not saying they're going to do the exact same thing, but the setup is there.
Yeah.
And this is where you try and take the shots when you have a favorable risk reward and you have this sort of, you know, this is the crawling up pattern, right? And then it all of a sudden it just explodes. So coffee's an example. Clearly bullish now. We've broken the downtrend. What we're watching on coffee is if you're not involved or if you took profits and you want to get back in, can we hold the half square here on any pullbacks? Around 232. If we hold that, no reason why we can't, you know, odds will definitely favor we're going to 250. We take that out, then you're talking about all-time highs. So I'm showing this as an example for the other two, which haven't happened yet, but the structure and the pattern is there. We just need confirmation from taking out that high. Like here was the high. When this high got taken out, what happened?
Yep.
There's the move. And that's what we have in sugar. That's a setup we have in sugar. It's a setup we have in crude. So now we have to wait for price to tell us if it's going to do the same thing and it's going to work. Anything else to add on coffee looking at it here?
Well, I don't think these prices are transitory.
No,
They're heading higher. We broke that upward trend line. That was a big deal. You know, we broke out of the channel. And like you said, I think half square or at least even a check back on the channel will be normal. So any reversals above that is very bullish. Very bullish.
Yeah, it looks
half square is
good.
a balance point. You got to watch at half square now.
No question about it. So that's it for the commodities. With all the activity going on in the risk markets, we have to pay attention to the commodities because this is the kind of stuff that happens. You know, just like in coffee, they sneak it up and boom, it breaks out after, you know, what, 18 months, 9, 10, 11 months here of sideways, frustrating everybody. This is the pattern in a lot of these commodities. And, you know, this is what probabilities favor. When you look at the monthlies, this sort of action is what probabilities favor is going to happen next. You know, in these ones that have been doing the sideways corrections or these, you know, these channels and wave 4 type of garbage. So all over ES this week, going to be watching that and let like a hawk, that in the NQs, and then paying attention to these commodity markets where, you know, these patterns are in place and these long corrections that we've seen for, you know, 6, 12, 18 months could be coming to an end. We just have to watch the price action and be on top of it. How about you? What are you watching this week?
Well, everything we talked about, honestly.
Yeah.
It just got busy. You know, we had a couple of months of, you know, here, no, there. It's a little bit, a little slow. Had to watch the counter trends and the corrections in commodities. But I think you see how everything's slowly shifting to the other side. And the difference is commodities are not making new lows, you know.
No.
So it's a time of sort of a big shift in the balance. So we have to watch it. And yeah. And we covered the ones that are critical right now. So we'll have to watch all of it. S&P, really, I'm looking for the next counter trend. So I really want to see, you know, where they come in, and we'll, of course, you post them, and I will too, intraday on Twitter. So if you guys want to check, follow us there. Otherwise, Ben, really good job. Thanks.
Thank you.
And you guys all have a good week.
Yeah, have a great week, everybody. This is the time we've been waiting for. It's time to make hay in the markets, and I think we're going to have an active rest of 2022, which is great for traders. So
Yes.
best of luck to everybody. Great job, Barrie, and we'll talk to you next week.
Thanks.
All right.
Mm,
Bye.
Bye.